Hey everyone, welcome back to Corporate Decoder. Today we're diving into Surf Air Mobility's latest 10K filing, their annual report. And trust me, this one's a roller coaster. Prepare for talk about debt, potential crashes, and maybe, just maybe, a bright future in electric planes. It's certainly shaping up to be an interesting story. First things first, this is their annual report for the year ending December 31, 2024. Right off the bat, they're telling us they're not a well-known company, formally declaring they are not a huge company that everyone knows. But buckle up, because here comes the first big flag. There's substantial doubt about their ability to continue as a going concern. Red alert. This basically means the auditors are worried about whether Surf Air can stay afloat. We will need to see if they will pull it off. So why the worry? Well, let's look at the numbers. The company has net losses. For 2024, they lost $74 loss, $74.9 million. That's better than the 250's losses, but let's see how they will do. One of their plans to get out of this hole is this thing called the share subscription facility with a company called GEM. Basically, Surf Air can ask GEM to buy shares of their stock up to $400 million worth. Sounds good, right? But the catch is, it's not guaranteed. If Surf Air can't meet certain conditions, or if their stock price tanks, GEM doesn't have to buy. And get this, selling all those shares to GM could seriously dilute the value of existing shares. It gets worse. They've previously defaulted on debt. There's no guarantee they can actually pay back what they owe. They are already behind on excise and property taxes. Even their tax situation is uncertain. They might not be able to use all their net operating loss carry forwards, basically tax deductions from past losses, to lower future taxes. Adding to the bad news, their management has found material weaknesses in internal controls. That means, to be blunt, their accounting might not be reliable. The document mentions another risk. If they somehow damage their reputation and brands, it could be seriously hurt the business. Surf Air is really vulnerable to consumer preferences and the economy. If people cut back on travel spending or prefer other options, Surf Air could be in trouble. And let's not forget competition. The regional air mobility market is getting crowded, and Surf Air faces some tough rivals, including airlines and other air mobility services. They even highlight cyber attacks as a major risk. If hackers target their systems, they could lose sales, damage their reputation, and face increased costs. Is there any good news? Well, they like to remind that they're one of the biggest commuter airlines in the US. They've got experience, strong industry connections, and are working on some interesting tech. They have this AI-enhanced software, Surfos, in partnership with Palantir to drive growth and profitability. They're also pushing hard into electric aircraft, aiming to cut costs and emissions. But remember, being first isn't everything. Their competitors could beat them to the punch with electric planes. Even something as simple as the price of jet fuel is a major risk. Rising fuel costs could really hurt their bottom line. And it has fuel expenses were $14 million in 2024 versus $722 million in the previous year. And let's face it, they're trying to build a business on technology that mostly doesn't exist yet. Electric and hybrid planes are still in the early stages, and there are no guarantees they'll work or be safe. Let's quickly look at some key numbers from the filing. In 2024, scheduled flight hours increased to 67,918 compared to 34,388 Tanda. That sounds like a success, except you must see it in relation to other numbers, as these hours might not necessarily have been profitable if costs increased more than that. On-demand flights increased to 3,515 from 2,1831 in the prior year. That is certainly good. It's worth reading through the management's discussion and analysis section. It gives a clearer picture of what's going on, even if you have to dig through the cautious language. And they close the risk factor section mentioning, we are exposed to the impact of rising inflation rates, and our ability to utilize our NOLs and other carry forwards may be limited. These are some more risks to consider. Now, let's dig into the nitty-gritty of how this company's run. It does not include an attestation report of their independent registered public accounting firm because they are an emerging growth company. Basically, the management found some serious shortcomings in their financial reporting. It might be worth reading to understand the level of effort needed to remediate this in item 9A. They mention how they are also committing to environmental, social, and governance ESG leadership, which is something investors are increasingly interested in. The company shares that a lot of its sales happen from the app. However, in the risk factors, they also mention that placement in such mobile operating systems application marketplace is more prominent than the placement of our current and future apps. That means there is some risk there. So what's my take? Surf Air Mobility is definitely a high risk, high reward play. They have a bold vision for the future of regional air travel, and their push into electric planes could be a game changer. However, they are battling serious financial problems, including heavy debt and shaky internal controls. This company could either soar or crash and burn. It's one of those companies that only time will tell. Thanks for watching. If you found this helpful, give this video a like, subscribe, and let me know what company you want me to investigate next in the comments below.